Hello, Warriors. How's everyone doing today? Hope everyone had a good turnaround Tuesday. There were a couple of things we talked about in FACE that happened. How you doing, Brock? So tip of the hat to Blake, Amit, Shahab. Yesterday live during FACE, ForexAnalytix Community Experience of Exceptional Trading Talent. Oh, that's not it. Hi, Monica. So Blake was talking about EG down here and talking about being, besides one of the most liquid instruments out there. He had a wedge. I think we were here. I said I wanted one more low, and then the news came out about the vote on Brexit. I don't know what happened afterwards, but you know, that's what created this candle right here, was one more flush. What surprised me is, God, I mean, people who put their stop, well, you never know, with different platforms under 75.5 were not elected. So, you know, sometimes I miss things because I'm looking for some capitulation move to take place before I go for reversals. But Blake nailed it. I don't think it's late. Okay. You know, we get a pullback to 86.20 or so. I like it. I'm not saying this is the beginning of a bull market. Okay, but we do have a weekly reversal working here in EG. And I also like the information it gives me that if for a while EG is going to be positive, my preferred long is euro, preferred short is cable. The cable's just a little too wild for me right now. So this says, you know, buy the dips in euro if you're a dollar bear. And I'll get to the dollar in a minute. But anyway, no, we're not going to have a reversal week in EG unless we close at 87.25. Okay, so that's a lot of work. But why can't we rally back to old support, new resistance? I mean, you're only talking about, you know, how about a 38% retracement of this huge move? So it's a counter trend opportunity, and in counter trend opportunities, Blake and I have talked about it. You don't have as much size on. You don't have the same expectations as you would have with a short here for and then a long here. Okay. Any questions on EG? I think we could rally back to between 87.20 and maybe 88. So looking to buy breaks there. Everyone got it? And you know what else? Should add to your conviction is, you know, you go to our platform. Who doesn't have our platform? Give me a Y if you don't have our platform. Or give me an N. Any N's out there? Wow, everyone out there is a subscriber. So there we go. So Andre's got a crab pattern down here. He actually was also right on the decline that I just showed you. So when Blake and Andre are saying something, I pay attention. Look at this guy's charts. I tweeted that Andre's harmonic symbol for his life is he's a butterfly. I'm not saying he came into ForexAnalytix as a caterpillar and then blossomed into a butterfly, although that could happen. Okay, so this is an advantage of having it. Okay, you have ideas, you hear things in FACE, you go to our platform, you take a look at, you know, past history of the analysis here and what pattern and play is working. Let's see. Andre actually has a higher default target here. So that's EG. Okay. So just a couple more things I want to point out. You know, I've been looking at oil here, And on a shorter term basis, see this green line here? Okay, you know, it was resistance, it is resistance, it is resistance, it is resistance. But it's my contention, if we are going to get a new high in S&Ps, and yesterday put a little doubt into it with, you know, this failure up here. But, you know, I'll say as long as we're not closing under 73, that the bulls have a chance. We start taking out, in fact, yesterday's low was near the 2-week off number. I wouldn't go home long S&Ps if they close under 29.80 going home on a Friday. Okay. In fact, I don't think I'd be long stocks if that happened, period. Okay. So back to crude is, to me, it looks like you could call it, I don't know, an ascending triangle. Anyway, if we get a breakout over this level, it measures to 61.8 retrace of the whole break from 63. Oh, Andre, I should have turned it off. Anyway, I want to buy a break here because it's my contention, if the S&Ps make new highs, that you're going to have a nice bear market rally in crude. So crude will not confirm the new high in the S&Ps, but why can't we trade up to here or here? Okay, so that's crude. And I think there was something else I wanted. Oh yeah, I was looking for a pullback in yields, and when the S&P started selling off, that's beginning to happen. Maybe there's more left, you know, maybe we could pull back to 165. TLT popped yesterday. I'm looking for a recovery back to 42 to 43, and my big picture on TLT is this was A, this was B. I'm looking for A, B, C to complete C down here. And this is my amateur Elliott work down here at 133. And this is where I think we could short a lot of things, you know, maybe even the S&Ps once we're down here. Because then, you know, I allowed people think this is just a 4, and then we could have a blow off in bonds to new highs. So looking to fade this little pullback in yields. And then I want to congratulate Steve also, you know, the gold silver ratio, you know, Steve, it's starting to look like, you know, we could get that other push that you showed yesterday, and the action today is pretty exemplary. You have gold twice as strong as silver. So I'll tell you what, you can't find a better place to spend an hour and a half if you're a trader. I don't care if it's FX. I don't care if it's equities. I don't care, you know, if it's individual stocks, to really kind of learn some methodologies that you could use and develop your own style with in here in phase. So I'm pretty proud of what we've accomplished here for you guys. I hope we've helped you and helped you develop. What moves crops? Follow Dale Dirkholz on Twitter, Zolt, or Angie Seltzer, Goddess of Grain. Okay, I've interviewed both of them. They're in the Midwest. They're grain people. Okay, I don't know the fundamentals. I just trade the chart. But I'll tell you something, Zolt, and tell me if you agree with me. You can't eat gold, can you? The Fed can't print soybeans or corn or wheat. And with that, I'll leave you guys to go run to the store and start stocking up on food in case there's any kind of disruption. And on that cheery note, someone who would be a much better survivalist than me is my boss, Blake Morrow. How you doing, boss?
I'm no boss.
Yeah,
I'm just your colleague.
Okay, all right. How you doing, colleague?
Good.
Good call in EG, and it's all the alerts go off. You participating?
No, yesterday I bought it. I bought it
Yeah,
and sold it. Yeah, I mean it's
it was
you
a
know,
wild one candle with that Brexit news.
yeah, it was I picked up it was nothing to write home about. It was more of like just kind of scalped in and out of it.
Yeah,
I'm like you. I heard you say a little earlier. I'm very nervous about the cable. I don't I
yeah,
you know I'm not a buyer up here, and I haven't been.
yeah.
Uh, but so I guess in essence I was shorting it as I was buying the euro pound,
Right.
just because I'm a euro
That's the
bull.
only way I'll play it now.
Yeah, well, no, I will.
It's
I
wild
wouldn't
enough.
mind. I
Yeah.
wouldn't mind playing the euro pound short. I just need a reason to. And
88, 87 and a half to 88 would be a
no, I'm not
great.
talking technicals. I, you know,
Oh,
I give me a Brexit deal, and then I'll short the euro pound, or give
oh,
me like
okay.
yesterday. It was like a
Yeah,
non-Brexit deal, and it
good
didn't
point.
pass, and I had a little bit of euro pound exposure, and I spun out of it, and it's a difficult currency to trade right now, and so
You love fading news, Blake.
huh.
You're old school.
No, no, no.
I,
I was prepared for it not to pass.
okay, but
So
I mean, when like I could hear you like, give me a Brexit deal, and you already know what you're going to do when you have a deal. That's what I'm
no,
saying.
I'll
Rip Van
buy
Winkle.
cable. No, I'll buy cable. I wouldn't. If that second vote would have passed yesterday, I would have just reversed out of my euro pound and probably shorted it.
Yeah,
I played the cable on the long side. I still think there's a lot of upside for
cable.
cable. Yeah, I think I was one of the services that our firm subscribes to. We have a few analysis groups that are Bloomberg specific,
Yeah,
that are some of them are related to the banks, some of them are independent. Uh, kind of imagine like um, kind of ForexAnalytix, right? But
yeah.
like what we're doing, but for Bloomberg only. So
Wow. Yeah.
you
Elite.
have it is pretty elite, because you have to have a subscription to Bloomberg, which, as you guys know, having a Bloomberg system's about $3,000 a month, and then on top of that, you have subscriptions that are specifically for Bloomberg terminals, and they charge a pretty penny on top of what you're already paying.
Yeah,
So
it's not a hobby for people that have Bloomberg.
no, no, no. Most of these guys are ex head traders of banks, and they have their own independent services that are only for, but they're targeting firms. Like we have our predominant client is you
Retail.
guys,
Yeah.
is retail, and we only charge you $100 a month, or $20 a month if you want just the basic light version of ForexAnalytix. But for these specific services, we are paying a lot more than that, many multiples more than that. But the reason why I'm pointing that out is because uh, why did I get
I
on
think
this?
because of some research, something you saw about cable.
Oh, yeah, yeah, yeah. I was just noting that these guys on Friday were saying that the positioning, and this is Friday afternoon, they're just like, positioning hasn't really changed in the cable, and I
Interesting.
think they think, and I tend to agree, that the market's still very short the pound. So my opinion was, if that Brexit vote would have passed, we would have had air pockets in the cable. And I think if and when, and I say if, because shit, I don't know. Excuse me, shoot, I don't know that if there's ever going to be a Brexit deal. It seems like it's never ever going to happen. But if it does, the pound will trade up to 300 pips before you can even act.
Yeah.
That you guys have to think about that for a moment. If you have pound short exposure and that happens, we talked a little bit about it earlier this week. You could actually
blow up your account.
blow up your account if you're not careful.
That's like a car wreck. Try and come back from a car wreck.
It is, and you could, if that vote, that second vote would have passed, the pound could have traded up to 131 before any of us had any time to act. My stops actually, as I was long the euro pound, might have actually been blown out, which it was fine because, like I said, I didn't have much exposure. It wasn't huge.
Anyway, I look forward to us being on a Bloomberg Select service, because you may think, Blake, that I'm not objective, but I bet our stuff is as good as people who have better marketing and PR and just a resume than we don't have those pedigree, blue blood crap. But our stuff, I bet, is as good as what people are paying, $3 to $5 grand a month.
Technically, we are, from our technical perspective, we are light years ahead of these guys. These guys are mostly more macro, more macro fundamental, and they break everything down. Every comment that comes out,
like Chandler.
Like who?
Like Mark Chandler, kind of, huh?
Yeah, imagine Mark Chandler just speaking all day long. That's what these guys are like. They're, previous head of bank trading, and but that's what they do. I
rest my case.
Yeah, they're that type of thing. We provide head and shoulders above any of these services from seeing technicals, way above and beyond. And then plus, you guys are notified.
We teach people how to trade.
Well, you're notified as you're not even in front of your desk. And with my Bloomberg terminal, I don't get these messages mobile. So even when I'm logged in mobile to my mobile Bloomberg, I don't get the messages. It's not intuitive. Like, I don't get notifications. Right. So there's a big difference there. So anyway, just little heads up. The reason why I was mentioning this is just because of the pound. If you the pound obviously turned lower yesterday because obviously that second time frame what do you call it? Shoot.
Basically, they timetable to push the legislation through.
Right. That didn't pass. And I get the reason why it didn't. It just you're trying to. Thanks, Delio. So you're just trying to cram legislation down their throats in a very short period of time, and they needed more time to go through it. So the pounds come off, but I look at the cable, and we have sold off a little bit. And this is a really, really very loose drawing of a channel. And I yesterday we slammed right into the channel support, but you can see we kind of drifted past it. So I wouldn't even really pay attention to that, because I had it drawn out because it was I was just trying to look for where we might actually be supported a little bit. But in all actuality, the cables come off, but how far does it come down? I think getting moved down to 128 is probably going to be pretty well supported down here.
Yeah, look how cheap the RSI is already.
Yeah, I mean, the RSI is already in on the hourlies, it's already
reset.
It's already reset. It's back to break even. The 4-hour RSI still got some work to do, but we're basically back to break even on RSI. So we're completely reset and can continue a rally if it wants to, like if there's reason to. You get a little skeptical when the RSIs are overbought or oversold, and then you get another leg higher or lower. But in this case, we've reset pretty much. So it wouldn't be surprising if we did get another rally. No, there would have to be, like I said.
Do you have can you show the daily with that triangle so I could see the width of the triangle we broke out of?
Yeah, here, let me reset that. So
wow.
Yeah, I mean, to be bearish the cable right now doesn't make any sense to me. We do have, you could argue that this would be an AB equals CD roughly. We surpassed it, but but
I was thinking the width of the triangle tack onto the breakout.
Oh yeah, you could do this.
That's huge.
You could do this. and then you could do this like for first and
Right.
secondary targets. You can go
Right. I like
first
that.
target there, second
How
target.
much is your course?
It's free. You're listening.
Yeah.
But
Wow,
you know what I
36.
mean. You know,
Yeah.
this is all doable.
Yeah.
Not today, but you know, over time. So, you know, to be bearish the cable right now, it would be really tough for me. You know, if we somehow completely failed and we get back below, like, let's just call it 126.50. I mean, that would be a situation where you're like, okay, that is a complete and utter failure. But right now, you know, there are buyers on dips in the pound, and same with the euro. The euros pulled back. We got a, you know, this is still a bull flag pattern.
Nice analysis, Blake. I'm going to shut up for a while.
Oh, thanks. I mean, this is a bull flag pattern. We hit the 38% retracement. You know, we're trying to develop a little bit of a hammer here. You know, if the euro closes around, you know, 111.20, it's going to be a little hammer. And, you know, I can't get super bullish until we're, you know, back above 40 or 50, 111, 40 or 50, but it's not very far away. It's not like the euro's moving a whole lot. I'd be little nervous. If I was bearish the euro, I'd be a little nervous, because what we've done is we've just pulled back a 38% retracement. You pull back a 38% retracement, that's usually a good indication that you're going to get a continuation of whatever you're looking at. So in this case, if we hold that 38% retracement, flag actually points to 113. All right, so you know, it's still, to me, it's still holding up. You know, it's flirting with this. It's flirting with the trend line. Yes, it's flirting with the long-term trend line. But remember, it's a descending wedge, and it was a big one. So, you know, there are buyers on dips down here, and you know, the probe towards the lows today was just kind of, you know, trying to shake out some late longs, in my opinion. And but I need a little bit more evidence that the euro's turning higher. You know, at this point in time, you know, 111.40, 111.45, that would tell me that the euro's ready to resume its trend. Now, before you get all crazy with the euro, keep in mind that tomorrow is Mario Draghi's last ECB meeting and conference. So before Christine Lagarde comes on.
Do you think he's going to pull a Trichet?
No, he's going to pull it's going to be a yawner, I think. I think the more important event tomorrow is all the PMIs that are coming out tomorrow morning.
Yeah.
Yeah, I think the Eurozone PMIs, the swath of PMIs that are coming out, that's really big. And you have to keep in mind that this data has been exceptionally weak for the last several months. We can look at it right here. Let's go to tomorrow. Let's see. You look at tomorrow PMIs, and then just, you know, give you an example here. Let's see if we can look at, you know, some of the charts. Like that's a French. I didn't want to see the French data, actually. I want to see like German manufacturing PMIs. Let's go ahead and take a look at the chart here. I mean, you can see how we've come off quite dramatically in recent months. Let's go over to the services PMI.
Blake, there is more to the right, by the way. There is a horizontal scroll bar as well, because it didn't fit.
Oh, right here. Yeah.
There
Oh,
you
yeah.
go.
Oh, there we go. There we go. Yeah. Okay. So there we go. There's, I mean, you can see that the data has come off really quite dramatically as of late. Thanks, Steve. There's the services PMI, German services PMI. You know, that's going to be all very important. Eurozone manufacturing. You can see it's just been a strong down move. If the data comes in better than expected tomorrow, that I think is going to have a or worse. Well, I think the market's expecting worse. So even if it comes in relatively weak, I don't know if the euro is going to see much downside because of that. The risk is an upside surprise. So if we see some better data come out, and we show some upside surprise, I think that's what's going to be more of an give the euro more of an effect versus a downside surprise, and versus the ECB. But you never know. Maybe Mario Draghi says, you know, go Italia, I'll do whatever it takes. And then he's gone. Who knows?
He might say, I have regrets that I was on the head of the ECB for so long and I never managed to hike rates even once. So I thought I'll do it today.
Yeah, you never know.
He's going to do whatever it takes for people to remember him.
Wait, correct.
Whatever it takes.
Whatever it takes, right. Correct me if I'm wrong. The ECB, in its existence, has never hiked rates more than one time. Or have they ever hiked rates before, ever?
No, Trichet hiked once before he
hiked.
left. And actually, there were 2 hikes, weren't they? On that,
Yes.
that 6-month period.
Yes.
There was 2 hikes? Okay.
And people are ignorant enough to believe that, for example, a couple of hikes can really make a difference in an economy, between, let's say, recession or going to growth or whatever, which of course is far away from the truth, right? Far away.
No. It's more of altering the path, right? I mean, that's what it is.
It's more about psychology, because we know that even no matter what kind of a change you get, in order for it to pass through the real economy, it might even require 9 months. Especially when we're talking about something as marginal as like 25 base points. It's really zero difference in the short term, especially absolutely zero difference.
Yeah, it's more of a signal, really. That's what it is. Yeah.
Right. It's policy shift. I mean, and you're right, psychology, and I mean that's all it is. But he's not acting tomorrow, obviously. But people are very nervous about Lagarde coming in, and about what she may deliver. I've actually read some interesting pieces thinking that her the dovishness that people believe she's going to deliver is really
Misplaced.
is misplaced. Yeah. So
It was on 60 Minutes, Blake, this weekend.
I missed
She's really
that.
getting the press, and she sounded like the biggest problem again to her is what's happening with trade, and she's saying, "Come on, guys, work out a deal," and almost like really putting the majority of responsibility for the global slowdown on that, which points towards, in her way of saying it, America and our administration. So
it's such a convenient excuse and so far away from the truth. Does it matter? Yes, it does matter. Is that actually that's currently the global economic problem that plagues worldwide countries into this slowdown? Absolutely not.
Well, she can't say QE is impotent now, or not as potent as it used to be, right?
It was never potent to begin with.
Well, at any rate,
either were you. You're lucky you had Jason.
Indeed.
All right, guys. Well, hey, I'm going to pass it over to Steve and Stelios and you, Coach.
All right, buddy.
Everybody have a great. What is today? Tuesday or Wednesday?
Wednesday. Bro.
That's Hump Day. Everybody go hump. You guys have a wonderful midweek day, and then
the only definition of hump I know, probably you're not referring to that.
No, he is. He is. Everyone has to go home and make love to something today.
All right, whatever it may be. Okay, I'll leave you guys. Thank you. Everybody have a great session, and thanks to everybody.
Okay, you have a good one. Steve, they do make simulated boyfriends and girlfriends now. Someone told me. Not that I know about it.
Yeah, right.
Someone told
the guy in the sex shop told me that they make. I mean, somebody told me.
All right. So, moving on.
We have a lot of fun here, don't we? Make money and laugh. What I can't. That's a potent combination.
You can't go wrong with that.
All right.
So, Steve and Dale, I have a question for you. Okay, I've been thinking about what's been happening in the UK. Obviously, giggling quite a bit, listening to these guys and seeing Berko saying order all the time. That's quite funny. But just taking a step back, okay, the English people voted 2.5 years ago, whatever it was, to either leave the EU or stay in the EU. There was no box saying stay with a deal or, you know, with whatever else. So, you know, theoretically, the right thing to do, the correct thing to do would be to leave the EU in March of this year. Obviously, they haven't left it. And that will be that. Now, what have we got that changed over the past few days or weeks? Boris Johnson brought in a new deal, and it was actually passed in Parliament, but
not the timeline though.
Yeah, they rejected the timetable to push it through because they were given 3 days, I think, or something like that, and it's clearly it's not possible. So what's the next step? So we have the EU, Donald Tusk, I think he said, we're open, and he's talking already to the 27 member countries to accept another request for an extension to the 31st of January. And this is, you know, the major sticking point now was the aspect of time. That's how I understand it. Okay, so if they get another extension till the end of January, actually they don't need that much, but anyway, if they get another one, isn't there enough time to actually go through the legislation, push it through in the appropriate timeline, and pass this deal? Because apparently Johnson now has got support for this deal. And now, you know, I read about him saying, you know, if it doesn't get passed yesterday, when it was done, if it doesn't get passed yesterday, I'm going to call for new elections. I mean, what the hell is that all about? You have got support for your deal, the one you've worked on for a couple of months or whatever it's been. Theresa May didn't manage to get support for this, not by a long way. So for me, this is success, right, for Boris Johnson.
It is, yeah.
As I see it. And now you're gonna throw it all away with elections on just because you don't have enough days to do it. Okay, so you get 7 more weeks or whatever it is. Go do it. And this is why
in the grand scheme of things, and after 2.5 years, it's nothing.
They don't want to put through the will of the people, and they're trying. Isn't that that's the will of the people that is already going to probably run past that expiration date, and instead of coming up with legislation. If they're, it's the people that have the choice to reassess if they want.
Yeah.
Why not have another referendum?
Yeah, but the thing is, how many referendums do you have until you get the result you want?
Yeah,
one.
You're right. You're right.
I mean, the point of a referendum, coach, is that if you go into the process of having a referendum, theoretically speaking, you're doing so to respect what you got.
Yes.
Yeah, so it's already unrespected.
Yeah, I mean, it should be implemented. And you know what? My thought from day one was, when there is such a hugely important thing to decide on, you can't have a 50-50 split, a level of 50%, then 50.1, it's done. No, it has to be by some kind of a majority, 60-40 or something like that, when it's that important. So you've got a 50.
Yeah, but that creates other political issues, Stelio, because let's assume that you put a barrier, let's say 60%. And let's assume that you get a referendum result that is 59.4% want to leave. Can you imagine? Can you imagine the repercussions of that? Everybody would be, "Are you serious? I mean, like 59% of us want to leave, and you're gonna give us a technical, thing like, we need 60%. Why don't you make it 70% or 90%, right? I mean, it's an arbitrary number. I mean, 50% makes sense because you say that I'm respecting the basics of democracy, which is 50 plus 1 means that there is a majority, right? Yeah. But why make it 60? Why make it 65? Why make it 58? I mean, then it all begins to be a random number. My personal opinion is that for serious matters, we shouldn't be having referendums. End of story. And the sad truth about it, and I know that many people don't like to hear that, is because the average voter, and I'm not making any reference to the Brexit, it's completely general comment. The average voter does not have the knowledge to decide on very complicated issues. Theoretically speaking, we have a representative, I mean, most developed countries have representative democracy, and the reason we do that is because, theoretically speaking, you elect people that are more, knowledgeable and capable to make the hard decisions for you.
Yeah, the problem becomes
it's very easy for people to just get trapped into believing the most populist person or party that is going to promise something for nothing. But as we know, that's never the case. So it would be theoretically quite easy to win a series of referendums on several matters. And I'm repeating again, this reference has nothing to do with Brexit, okay? A series of referendums on several matters that, in essence, would we would provide entitlements to some groups of people, but overall they would be bad for the economy, bad for the country. That's why
the problem of having representatives like that is that the big interests, they find it very easy or much easier to influence 300 or 500 or 600 people than to influence a whole nation. So then you get to other issues. But yeah, I understand what you say.
That is a valid point, although we've seen that influencing the vast majority of masses is not that hard overall, right? They do it through social media, etc. I think that there is no perfect system, but since the political cycle is a huge problem, I think that a very big step forward would be to make every single person unelectable for a second term. That would, in essence, make it more likely that they would make the right decisions for the country, because they wouldn't have they wouldn't have as a main goal to say, okay, what should I do so people vote for me again in 4 years from now? Because if they know they can't get voted for again, then you have a very decent reason to say, okay, this is it. I'll have 4 years in power. What do I do?
Or your time to make money out of the whole thing is much more limited, so you do more extreme things, as as people in our country.
Yeah, but more extreme things are easier than to check through other balances, like judicially, you know what I mean?
Yeah. Anyway, it's a long discussion. Actually, Grigoris just wrote, he said, same thing happened with Greece, of course, voted no for a referendum, 2%, and then the government implemented yes. So there you go. Okay. I think this is an issue we could talk about for hours, but let's see what happens with the UK. I'm looking forward to seeing the next few days.
It's like the Twilight Zone everywhere.
Things are getting very, very weird, very, very fast globally, and this is something that has been going on for
for decades.
I would say a couple of decades, but I'm afraid that the
it's
pace,
like culminating.
The pace is accelerating, though, isn't it? I mean, and it smells. The smell is like that of gunpowder around us.
I don't know. It feels like someone dosed my natural light with some LSD. All right. So anyway,
Grigori says,
I'm tripping
and buy
here.
the UJ and SPX. Those beasts cannot go down for long. Seems easy money on longs. There are a lot of people that have been trading during the past 10 years, and they only know what a bull market is. Some of them are about to find out in the not so distant future, that bear markets are a lot more vicious than bull markets. They might on average last like 1/3, 1/4 of the time, but they can, be very, very vicious.
Let me ask you this, Steve. Some of the Super Bulls, they're talking like 4,200 in the S&Ps by the end of 2021. Can you see that happening? If the Fed is successful for a while, I mean, what could generate it, that kind of move in the S&P? Say we get a correction from this 30, 50 level or something, but some long-term counts from, some guys that I've seen be right about things. 4,200, how does the S&P get from 3,000 to 4,200 in a couple of years? Can you think of any fundamental scenario?
Yeah, I can think of one that you're not going to like. High inflation.
Okay, well, that's building. So a big bear market in bonds, and the S&Ps continue to blow into, because when you look at it this way, and I've thought about it. Okay, so the bull market in stocks started in August of '82. Okay, so we're on the verge of it being 2 full generations, and there are generational cycles. So that'll be complete in 2021, going into 2022. It'll be 2 generations of 40-year bull market. And then
Not
those
exactly.
guys, those
Don't
same
don't
guys.
forget that everything got cut in half 10 years ago, right?
Yeah.
A little bit more than 10 years ago. Everything got cut in half. And if we're talking about the period that you mentioned, we also have to take into account that in 2001, the Nasdaq lost 80% of its value. 80%. Now, from your experience, and you had been around in the markets back then, if you talked to people in 1999 and you told them, oh my God, I hope you're not really buying the Nasdaq and tech stocks, because
I did talk to those people.
Yeah, because
you know what they said to me, Steve?
I presume that you're going to lose 80% of your money, and you told them, I think this is a bubble and it's going to crash, and it's going to lose more than half of its value. The vast majority of them probably laughed in your face if you told them that, right? I mean, they told you, take your tinfoil hat and go somewhere else.
You know what was even stupider? When it started heading down, and I said, well, what's wrong with the word sell and raise cash? You know what everyone would say to me? Oh, then I'll have capital gains taxes to pay. I'll have to pay taxes. I said, one day you'll hope that you would have had to pay
one day
taxes.
you'll hope that you have capital gains taxes.
Yeah, I swear, but I'm telling you, many people said the same thing to me. They didn't want to ring the register because they didn't want to pay capital gains tax.
Yeah, and needless to say, the reason that the Nasdaq lost 80% of its value was because many of those stocks went to zero.
Yeah.
So there were several people that might have been invested in the more bubbly stocks that didn't lose 80% of their portfolios. They lost 100% of their portfolios. The same exact people, when very few voices were talking to them in 2005, 2006, 2007, the beginning of 2007, and they were telling them there is a huge housing bubble and, the bottom will fall off the housing market because A, B, C, D, E, F, G. I mean, no need to go into details because it's going to take us time. I can go ahead and tell you everything that happened back then, but, it's quite complicated. A lot of people were laughing about it. Like, what? So you mean that real estate prices can actually go down? No way. Real estate prices don't go down. And, people...
They're saying that again.
Yeah, exactly. So, and, it's in essence, all of those statements can be summarized in the usual extremely dangerous sentence, which is this time is different, right? So every time the argument is this time is different, real estate can go down because this time fill in the gap.
Yeah.
Stocks cannot crash again 50% as they did in 2008 because fill in the gap.
Yeah.
Nasdaq cannot crash again 80% because fill in the gap. There is always an excuse from those that make an argument, the bullish argument. But, there is a saying, which is very right one. I don't know if I'm going to transfer it, with the right words, that if you make money, if your job, if your well-being depends on just looking at the bullish case, you're just going to be seeing the bullish case. If your well-being depends on that, you know what I mean?
Yep.
So, it's a good thing. And something else to take into account. Every single person that has always, this dates back to the 20s and the 30s. Every single person that has been warning about every single bubble that we have inflated was always early. It's not by accident that the people that are considered perma-bears, which actually they're not perma-bears, but I can explain that, they were always early. So people are like, oh, come on, he was warning for 3 years, at some point it happened. The reason why people that are warning about inefficiencies and huge underlying problems are always seen to be early is because those problems, once they have started building, it might take a lot more time than you would expect for the problem to manifest. And the reason is because there are always, you know, the appropriate institutions in government, central banks that have every reason to want to try to avoid the inevitable, you know, problem from blowing up. So there is always going to be a response that might delay the final outcome. So, you know, people that warn about things that are obvious always seems to be early, but it's not by accident that, you know, when they actually talk about fundamentals and they say, listen, you know, this thing is unsustainable because ABC, and that makes sense, you know, it might not be prudent to immediately go out and short that, but it would be prudent to at least know what are the underlying fundamental problems and why you should be careful in the way you trade. And if you want to be bullish, you should be bullish until you get a technical signal. But once you get that, knowing that fundamentally, you know, there are huge underlying issues, you shouldn't be trying to buy every single dip that comes, because at some point you're going to be the one that's holding the bag. And that is probably going to mean the end of your trading days and your account. Anyhow, we had a little bit of time to rant since nothing much has happened since yesterday. So the things worth mentioning since yesterday are, first of all, the move that we saw in the cable. Now, if we want to speak purely from a candlestick perspective, you can clearly see here that with yesterday's candlestick, we have an evening star formation here, which is a bearish reversal signal. Now, as I was saying yesterday, we got rejected from 130 after like 4 consecutive days that we were testing that zone. So, you know, it wasn't that hard to predict that we might see a pullback from there. Is this the beginning? Is this the beginning of another bear leg lower towards, you know, lower lows? In my opinion, it isn't. And I still believe that there is a very, very decent chance that the market is going to find a bid again. And as long as we remain above this descending wedge, its resistance, which is broken and, you know, might act as support, I think that the market can continue rallying, perhaps not immediately, not starting today. I mean, you know, it would be healthy for the market to spend more time either consolidating in some kind of a horizontal corrective pattern, or even, you know, moving lower towards 126. But I have to tell you that above 125.80, I maintain a bullish bias. So I'm actually looking for opportunities to be buying. As I said, ideally not yet. I would want, you know, several days to pass and the pound to slowly start depreciating. That would be the ideal scenario for me into looking to buy. Now, of course, the fate of the cable, you know, the same fate more or less we had here in the gappy. So gappy, a nice black candle as well, seems to have stabilized for now, but I have to say that the risk reward would favor, you know, in the very short term, short positions against the high. Okay, again, in the short term, perhaps for a deeper correction lower. Pound Aussie and pound Kiwi also, there it is. I was showing yesterday that both of them got rejected from important areas. Pound Aussie, though, still finding support, as you see in this horizontal support resistance area. And so far, I don't see this move lower having, you know, anything else but corrective characteristics. And the pound Kiwi has moved lower quite significantly after finding that confluence of resistances up there. We drew that a long time ago and not yesterday, that we might see a move lower from there and the continuation higher following that. And of course, we don't know if we're going to see a continuation higher following that, but I can tell you as a fact that 2 is support. So I won't be selling so close to 2. You know, you want to sell, you wait for a breakdown from 2 and you might sell from there. But if you really want to do something with pound Kiwi now, I think that from a risk reward perspective, buying here makes more sense, right? You can see why. I mean, we're testing confluence of supports. I'm not saying I would be buying currently, but I say that if I was forced to do something in the short term from this exact level, it would be buying and not selling. As I said, my ideal scenario, both for the pound and the euro, is to see some corrective moves unfold lower in a slow, orderly manner. I think that, you know, that would be the very ideal scenario for me to feel even more comfortable buying. The same situation here with the Euro USD. You can see it here. I mean, it had already broken above some trend line resistances. 111.10 is support. We tested it earlier today. You know, we might even hold here. I think that, you know, the Euro USD underperformed the pound USD for several days. Perhaps it can do the exact opposite now. So, you know, I would assume that if one of them is to find sooner and faster support and continue its move higher, probably that's going to be the euro and not the pound, because the pound might have more things to digest moving forward. Now, one pair that has definitely made a very important move is the USD CAD. I was mentioning that almost on a daily basis last week, saying how important, how critical this trend line support is, because it is a trend line support of this ascending channel that dates back to summer of 2017.
Yeah, you were saying it when we were breaking that pink line.
Yeah.
That was your first warning before it broke the...
Yeah, then it broke
nice call.
that one. And look at what happened yesterday. Yesterday, we had bad Canadian data, right? Bad Canadian data. And following that, we had a very healthy rebound in the USD CAD. But look how we closed the day. Almost unchanged. So the market, when the market receives bad Canadian data, very bad Canadian data, and shakes them off completely, and we close, you know, unchanged after a big move lower, that is definitely not a bullish signal. So I have to say again, and I mentioned it yesterday on the webinar, 131.40, I said yesterday, is resistance. So if we back test that, you know, might be a good area for you to sell. We didn't make it to 131.40. We stopped at like 131.20 roughly. So I think that the next support is down here, as you see, 130.20. And following that, we probably have, you know, the last nail in the coffin, because a lower low from that, you know, also produces a lower low after, like, you know, almost 2.5 years. So I think that we already have a very, you know, big technical event that has taken place here, and the close below 130 is probably going to be, you know, the final proof that something, you know, bigger is taking place here. Look at the RSI also down at 33. Those are readings, you know, that especially if we manage to get in oversold territory, that's going to be an extra signal that, you know, the direction of this market has changed after more than 2 years. Okay, so I do think that this is important, and having to do with its implication in CAD yen. We also saw that yesterday. I want to see if we're going to have any follow through, but this is the wedge I was looking for yesterday here in the CAD yen. Now, of course, if the CAD keeps pushing lower, so USD higher, so USD CAD keeps pushing lower, I don't know how sustainable this break is going to be. We already found support here. So, you know, I'm also monitoring this to get like a better signal of what's happening with the CAD. Besides monitoring 130 in USD CAD, I'm also watching to see if this is actually an ascending wedge or not. Because if it is an ascending wedge and we start accelerating lower, I'm assuming it's not going to be easy for the USD CAD to also move to the downside. If we move higher from here, it's not going to be easy for the USD CAD to move lower, unless of course the USD yen like puts in a big reversal on its own. But so far the USD yen doesn't look like it's about to do so. I mean, it's very hard to say what's going to happen here because nothing is happening. But you know, one thing is certain, given the fact that we came, you know, in this consolidation from a move, you know, from what was it, 106.50 all the way up to almost 109. I'm assuming that this type of price action has a very decent chance of getting resolved with another move higher. So I don't really see immediately like a big bearish threat having to do with the USD yen, not in the short term at least. Even the RSI, look at the move of the RSI lower. I mean, this is exactly what you would want to see in a corrective move, right? A slow move from overbought territory to neutral. And that's exactly what we've done here. We've moved from overbought territory from like 77 in the RSI down to 40 something, 42, which is, you know, which is excellent. It's exactly what you want to see if you're looking to buy it. Okay, so that's what I think about it. Now, one more pair that I think is very, very interesting to see, and I'm even contemplating of putting a pattern in play for that. I have a few reservations, mostly because of the euro. Okay, trading view. Okay, trading view wanted to reset. Okay, it's this one, the Euro Kiwi. Now, even if you want to be more conservative with this trend line, so you take into account this wick, just look at what's happening here with the Euro Kiwi, right? The Euro Kiwi is in the precipice of a big breakdown here after a false break higher. So, you know, it's the combination that I like so much. We first got a false break higher, and you can see it here on the 4-hour chart. We first got a false break higher from this horizontal resistance area. And now we're breaking through what appears to be an ascending wedge. And even if you want to go shorter term and look at this price action, this looks to me like a bear flag. There it is. So I think that, you know, the Euro Kiwi is in danger of accelerating lower from here, with 170 being the next area of support, which is like almost 200 pips away, right? So Euro Kiwi not looking that good, and look at the RSI as well. Quite a bearish picture here from overbought to oversold, and this rebound barely managed to reset the RSI at 40. 40 to 60 is the area that you usually look for, you know, a correction to stop at. So if that's the case, if that was the end of this corrective rebound, it is as weak as it could be because it barely made it to 40. Okay. So Euro Kiwi, I think, looks rather appealing. And, you know, if you want to short it against this rebound highs, that's barely like a 70, 75 pip stop loss. Not bad if you consider that you might be looking for like 170 pips to the downside, right? It's almost a 3-to-1 risk reward ratio, almost, not exactly. So not that bad. In my book, that's probably quite a nice trade there. Let me go through questions. In SPX cannot happen. Oh, having to do with the SPX, yes. Yesterday I was showing this at some point in the chat room that this might be an ascending wedge here, and if that's the case, I would be expecting a move back towards 2960, and we did break it yesterday, and now we're rebounding. So I want to see if this trend line support is going to act as a resistance in this case. So I don't think it's a bad proposition for somebody as a very short-term trade I'm talking about now, right? So as an intraday trade, for example, or a couple of days, if it ends up working out, I don't think it's a bad idea attempting to be short here against
Like it. Look at that divergence.
Against like 3005, I would say. So let's say 12 handles, risking 12 handles to perhaps make like 33. Not bad.
Yeah.
Right?
Yeah. And look at that. What a classic Ford drive to a top.
Yeah.
Textbook.
Yeah. Yeah, exactly.
All right. Anyway, Ryan's here.
Okay, good.
Cool.
Ryan who?
Ryan Scott of blackroots.com.
Okay, and what is he going to talk about?
We're going to find out.
Okay. Let's find out then.
All right. All right. Thank you, Steve.
My pleasure.
Ryan, I'm going to promote you. I know, running your own business, you probably don't get a lot of promotions. So.
Oh my God! Not again, this joke.
Yeah. So enjoy it. Everyone that comes here gets a promotion. So welcome to Face, Ryan. How are you, buddy?
Hey, what's going on, guys? Can you hear me
Yeah.
loud and clear?
Loud and clear.
Awesome. All right, let me just, how do I share my screen?
There's a green box.
There is that menu that
share.
if you mouse over it, it pops up, and then it drops down once you, it says share, yes.
There we go, I think.
There you go.
Yeah, got it.
Oops. All right, here we go.
The calendar, and now you're showing Bitcoin breaking down. So we'll get to crypto in a minute, Ryan. I want to start with knowing a little bit about your journey in trading. I understand your Twitter handle now. You're an equestrian, so cantering is a good pace for trading. Or do you gallop?
Oh no!
At times, man. Huh?
You gallop when you're younger, right? Before you learn the lessons that allow you to last in the long run.
Do you jump over, obstacles in your trading?
I thought we were still on the equestrian.
Yeah, we are.
Yeah, you have to. But my wife is more of the equestrian.
I see. Okay.
Similar background in that, but that's more of her thing. But the name comes from that. Yeah.
So I'm always interested in how people ended up in this industry and what they might have been doing prior and what the catalyst was that got them involved in trading and just being involved in figuring out the jigsaw puzzle of the markets. So how did it start for you, buddy?
Yeah, absolutely. So ever since I was probably around, end of high school, I took an interest in markets, went to school for finance and economics. Last year did a summer internship at the time, which was Smith Barney, if you remember them.
How do you like cold calling?
A lot of caffeine.
It sounds like you enjoyed it.
Terrible.
Yeah.
Left there, went to work for a family office. Went to work for a family office at the time. Had a job set up to actually take at Lehman Brothers at the time. My grandfather, who is a big guy in commodities, was friends with Joe Gregory. So I don't know if you know who Joe Gregory is. That fell through.
I come from the Chicago commodity side.
Okay. Yeah. So that fell through in October. Everyone knows what happened to Lehman Brothers. I went back to family office. Wasn't really interested in wealth management per se. I was more interested in the overall dynamics of the market. So more of the technical side. Took more of an interest in what I would say is something similar to CTA-like strategies. So
Okay,
studying
so are they,
momentum.
I mean, CTAs can do anything. So is it more like swing trading, position trading?
Yeah, so
They're
more.
trend traders, you know, a lot of CTAs are try to be trend traders.
Yeah, well, a lot of their strategy can boil down to something just like the 10-100 moving average, right?
Yeah.
They are I was more interested in time series momentum in the beginning. So
Interesting.
identifying, early stage momentum, serial correlation, not being as active as a lot of my counterparts. I think that you end up getting when you start to try to be too active, it's really you're trading from boredom. I was looking for the larger moves in the market. So I got into trading managed accounts. I wanted to, carve my own path. Traded managed accounts, did that for a little while, and then started what was a boutique at the time, Kenner and Clark. Block Roots is actually completely separate. I partnered with a guy named Josh Rager, who's a big, awesome guy in the crypto space.
Okay.
What's that?
Yeah, I was because I noticed I went to the website and, I probably assumed that was your background too, but looks like you were probably trading equities at the beginning of your career.
Yeah, so started trading equities, then took an interest in oil. I wanted to, whenever I started doing more discretionary trading for myself, I realized, and I think that a lot of people, they come to realize this soon, and if they don't, they probably should, is that you should try to focus on a limited amount of assets.
I believe that. The
Just
other argument is, so if you have a larger universe, that sometimes those select instruments that you're focused on aren't offering you compelling trading situations. So if you're scanning more, because up until recently the euro and the dollar's been kind of sideways for a long
right.
time, and so if you're focusing on just that, and it's really just a range and choppy, there's nothing to do, a bigger universe, there you might see something else. But I agree, especially for beginners. You know why?
Yes, yeah.
You know why, Ryan? I knew guys, and it sounds like you probably knew guys on the floor at Comex or whatever before they all became bowling alleys. Did you know, traders in the open outcry days? Are you old enough?
Well, I'm 34 years old, so
okay, so not
was...
really. Okay,
No.
so not really. You're from the machine age, but
Yes, screens.
the point being, I knew guys on the CME floor that never left one pit their whole career,
Yeah,
and they knew it like the back of their hand. Who
yeah.
influenced you with your work, your technical work? Did you have mentors? You read books? How did you develop your technical style? Anyone a big influence on you?
Well, so originally my grandfather was a lumber guy.
Oh
So
gosh, yeah.
yeah,
They were the biggest crooks, the lumber pit on the CME floor.
yeah. So
They really
originally
were, man.
he was a lumber guy, but
Oh,
I mean,
wow.
if
Yeah.
there are guys that I look to and I try to emulate, I wasn't originally looking to follow anyone technical in particular. I was just trying to pick up a little bit from, you look at, famous traders first and foremost, right? So you're trying to follow in the footsteps of giants. So,
So
Paul
market
Tudor
wizard
Jones.
guys.
Yeah, Paul Tudor Jones, yes.
Yeah, I love it.
Andy
I love.
Hall. Andy Hall was a
Okay.
tremendous oil trader.
Okay.
And then from CTA background, you have guys at Quest like Nagol Kuljahan. Portfolio managers, even just bright guys, Mark Spitznagel. You try to take a little bit, create your own ingredients, and you have to learn through osmosis and trial and error before you kind of come up with something that works for you.
Well, Schwager said, I asked Schwager when I interviewed him, I said, Jack, what's the most important advice you could give to a trader? And he said, to find a trading style that suits your personality.
Absolutely. Yeah, absolutely. Even if I don't know a trader, I feel like I have a pretty strong grasp on what type of person they are. If you think of a scalper versus someone who's a, swing trader, more of a position trader, you can imagine that those two people probably have two different temperaments.
Yeah.
Two different levels of the activity. It probably precedes some type of personality characteristic. And you do have to find something that suits your personality. I think that's one of the, not to get right into the subject, it's the things that trouble new traders is you don't find the one thing. They have that constant style drift. You're constantly looking for the
Holy grail that doesn't exist.
Yeah. And, even if they don't understand, they have a pretty tenuous grasp, I'd say, on things like expectancy, risk, just an idea of what they need to, what type of clusters of losses a system can expect. They have a few losses in the system and they immediately start, wiping the drawing board clean and looking for something completely new.
Okay, so I think we're talking on what might be a pretty significant day in Bitcoin. And I see that mainly you have pivot zones. I'm not sure what you have at the bottom for the green. Is that just volume?
Yeah. So
what do you have there?
All right. So the thing about Bitcoin that really drew me to it is originally it was a volatility. So ended 2017. I was not an early adopter. So I was not someone who was getting in Bitcoin, to hedge against, central bank abuse or a dystopian society. I was drawn to the space the same way that a surfer is looking for where the next waves are, and and it just happens to be that if you're a technical based trader, Bitcoin trades in such a formulaic or deterministic way that it has no fundamentals, and that's why it has those tremendous drops, because there's no point in which anyone steps in and says, okay, Bitcoin is now 30% down. If Apple drops 30%, if any of these major Fortune 5 companies drop 20%, you're probably going to have people that are going to be stepping in, and whether they're value investors or they're growth investors. Bitcoin doesn't. So it's just the most reflexive, technical based asset that I run into.
Great surfers don't try and catch every wave. They too
that's
wait
right,
for setups.
That's another thing that comes with maturity too, I think. And that's funny because I'm a surfer. So
okay. Are you out here? Oh, and you're in New York. Where do you surf?
Yeah. So Long Beach, Gilgo. Unfortunately, I was away last week or 2 weeks ago when we actually had the best surf. Yeah, the best surf I think that New York had in its entirety. So.
I tried to learn it when I moved out to California. I pearled.
Okay.
You know what it is, right?
No, what's pearled? Is that the skimboarding?
No, that means that, when you're taking off on the wave, by the time you catch it, there's nothing but air underneath you. And you pearl right into
Yeah.
You wipe out. Anyway.
Yeah.
So I want to get a little
on my chart right now.
We're looking at Bitcoin. I've been looking for this area. Okay. From it's corrective from, if you want to call the rally from the beginning of the year. What do you think around here at this 7,500 level? I know classically, maybe you think it's a continuation formation and we could trade to 5 or so. So what's your take on what's happening here?
So yeah, the thing about, so we came up off 300, we came up basically 320% off the lows.
Right.
We had a nice V and then, prolonged sideways action. Bitcoin is the thing that I'm looking for is I want to find areas where, one, I want to identify right away, the path of least resistance, who's in control, positioning, right?
What are your pivots based on, Ryan? I'm sorry to interrupt you, but I think that's the most important thing that you have on your setup here.
Well, mostly what I'm looking at is volume points of control. So areas where there are, a large amount of transactions, large interaction of buyers and sellers. So I'm primarily looking at volume profile.
That's what's at the bottom of your chart?
This is so what I'm looking at right here is actually, this is a funding. So this is the one thing that I think is one of the idiosyncrasies of cryptocurrency is So there's an exchange that's the largest derivatives exchange for crypto, and it's BitMEX.
Right.
And it's a peer-to-peer futures exchange, so they offer perpetual swaps. And it has basically, whenever there are traders that are dominant one side, so when there's really aggressive longs lifting the offer, they essentially are going to be paying an interest rate, and that goes to people to take the other side of the market. So it's a mechanism created by the exchange to move the futures price to the spot price, since it's a cash settled futures.
Okay.
So when that funding rate is either extremely high or extremely negative, that can give us some insight into what the overall positioning is on an exchange that more or less leads the market.
Okay, because you don't have COT like you do with futures.
Well,
this is kind of your look inside.
Well, I do look at commitment of traders on the CME, but that's
it's too thin to mean anything.
It is. I mean, the margin requirements are higher on the CME. So, at some points you could say that the actual value traded might be higher on the CME compared to the notional value on something like the crypto derivatives exchange.
Huh. Okay.
But I wouldn't say that is a strong enough indicator. There are times when I'll reference, that the long only asset managers have gotten a bit longer and it looks like it's supportive of a trend, but I don't think that that's really actionable information.
Okay.
So BitMEX is the exchange that actually leads the market more often than not, because this is an asset that the liquidations alone are what a lot of times can cause these cascades, right? So to the upside and to the downside, crashing upward and downward. Okay. So when we have so primarily I'm trading price volume and I'm looking at delta. So I'm looking at order flow. So cumulative volume delta, the sum of, you're talking about aggressive trading versus aggressive order flow versus passive order flow. I don't know if you're familiar with.
I know nothing about it. This is new territory for me. So
all right,
tell me how you see it, and I mean, I could guess. Passive.
What I will be looking at is I'll be looking at if you're on trading technologies, you could look at something. You could get an indicator such as the cumulative volume delta, and that's showing you the total of orders lifting the bid and hitting the offer. So basically, market executions, right?
Okay.
So there are certain markets, right, that move a little bit
kind of like what the Souls Bandits used to do in the old days.
I'm not really familiar with that.
Oh, I keep forgetting, and you're a puppy. All right, but let me tell you something. How long have you been doing this?
12 years.
Okay, you're a pro. No, you look. Like you said, you could tell from talking to people.
Yeah.
I've interviewed over 1,000 traders, so I can tell too. So okay, go. So you're using things that I've never even considered.
So markets, it's a zero-sum game. So every buyer needs a seller, but there are times when there are more aggressive buyers versus more aggressive sellers. Now, market order needs to match with the limit order, right? And we know that a lot of the time, larger traders shaping the market are typically going to be executing with limit orders. From transaction cost point, from just the idea of being able to put on more size with doing it in a more surreptitious manner, not causing too much movement. Now, when you see that there is a large amount of, for example, orders buyers lifting the offer, right? So aggressively buying, but price is not really following. That would be what you'd say is a divergence between a cumulative volume divergence or cumulative delta divergence.
So basically it's saying a lot of buying's coming in, but it's having very little impact on price, which is a tell of market weakness.
Well, that and the tell of who the heavier hand is.
Okay.
So the heavier hand is in the limit typically.
Okay.
So I'm looking for, where traders are aggressively lifting the offer and price is not moving upward, okay, and beginning to fall. You're looking at something like a footprint chart where you're looking at more of the atomized and granular activity that's occurring within candles. So I'm primarily using this in combination with price action, because a lot of the times when you're looking at price action, when you're looking at trading levels, support and resistance, it leaves out a lot of context. You don't really get a complete picture of, say there's certain imbalances that might exist that you don't see. So imbalances between, again, aggressive buyers versus aggressive sellers in an area. you don't really get a complete idea of what goes on in the auctioning process or in the auctioning environment.
Okay.
So I'm going to be looking at taking major moves based on this. So what we saw with these last moves at this top, okay, you know, this was, whether or not you want to think this was a melt up or not, a lot of the time, I think that the trouble with people, with crypto traders, is they romanticize the asset so much they're not willing to let go of the fact that it might be going through a major corrective period. So what you see at the tops of these structures over here was there was a lot of aggressive buyers in the form of market orders, but they're relatively small sizes. So that is so those are your, you know, the last people that are sidelined that are trying to jump in at the top of a move. And that is one of the things that, you know, you're going to identify. You're going to see that, for example, most of the moves are market executions. The heavier hand is clearly in the limit because price is not resolving upward anymore. And, you know, the volume is a little bit lower in terms of the order size. Each transacted order size it's typically a smaller player, because your smaller players are going to be executing at market, right? So a lot of your smaller traders are going to be executing at market. So it's just one of the things I look for along with support and resistance. But this right here is the volume profile. So I'm looking at, right now we're falling below the point of control. The next area I look for would be the next, you know, high volume ledge, which is not really a high volume ledge at all, but nevertheless, it typically is going to be an area where you'll find some type of responsiveness through dormant orders, or just the fact that everyone is looking at the same chart and it's such a technically traded asset.
Okay. So you're not seeing any reason or accumulation or things that you look for this down day that we're having today to possibly end up being a place where you want to accumulate? What would your outlook be for what you're seeing right now for Bitcoin? Not what happened in January,
right?
What's actionable now? And it's okay if there's nothing that you would do, but what are you looking for going forward here in Bitcoin?
Yeah, so what I'm going to what I want to do is I want to see how we respond when we're moving sideways. I want to see if we are going to be in a position where on the derivatives exchange, you know, we have something like an extremely negative funding rate, indicating that a lot of those traders on the exchange are aggressively hitting the bid. Okay, and in that case, if they're aggressively hitting the bid with market executions, and we're not really seeing, again, price do anything to break down, that's going to be an area I'm going to be looking for, that area where those traders can be caught off sides. You know, we have one of those moves that seems like the obvious short. I'm patient. So I'm not
like today.
Yeah. You know what?
I mean, today, I mean, what's more obvious than the breakdown today?
Yeah.
What are you saying?
This is within a technical range. You know, you move sideways within a technical range long enough, and you have, you know, that accumulation of fuel on to the upside and to the downside.
Let me ask you this: what happens if you do use stops? Because I've heard from a lot of people that trade on that exchange that they're unable. A lot of times, the market will actually go through their limit orders, and they won't get filled. How do you trade on BitMEX with stops?
No, so
are there stop hunts like there is everywhere else in Bitcoin?
Yeah, absolutely. I actually don't. So that's the thing. That's where I gather my information from BitMEX, but I actually don't actively trade on BitMEX. I actually use a different exchange called Bybit. It has a better matching engine. BitMEX is known to have what's referred to as scam wicks. So
never heard of that.
Yeah.
Wow.
Yeah. Well,
yeah.
You know, there are definitely
like spoofing.
Not spoofing, but well, of course, spoofing takes place, but there are periods in which, you know, there's been $200-$300 wicks right through people's stops, and the market obviously moves in the opposite direction, right? So it seems like more often than not, there's a good amount of stop hunting that occurs on the exchange.
Okay.
Yeah.
All right.
The exchange that I use, Bybit, they don't have a trading desk trading against anybody. They have what is, in terms of the technology, they have the better matching engine.
Okay.
But I get a majority of the information from BitMEX because that is the most heavily populated exchange. So that's where I would say that's the most accurate information you could get is from that exchange.
Okay. So right now, flat, waiting for some technical evidence. If we get through here, am I correct to assume that 5,700 to your next stop?
Yeah, absolutely. I don't see any. Typically, the gaps, the same way we move up and cut through butter like a hot knife, it works to the downside as well. That is one of the reasons what brought me to the space is the asset is so reflexive.
Okay.
And whether or not Bitcoin goes to an all-time high in the next 2 years, or that's not something that I even really focus much of my attention on. I think that's a lot of people in the crypto, that's their attention is focused primarily on that.
They all want to be Nostradamus.
Yeah,
Huh?
and it seems that way.
Yeah.
It is, though. The space is
Hold
really
on,
like
hold on. My tinfoil hat just fell off my head. Well, I tell you what, it's been, interesting talking to you. You have a lot of wisdom and a lot of knowledge, and I could tell you have a lot of intensity in what you do. I could tell you love it. And people that are listening to us now or listen to the recording, the video later, now would be a good time, Ryan, to show your website and contact information. You can follow Ryan at Cantering Clark on Twitter. You want to show your website and the services you offer?
Yeah, so we actually so the website it's essentially, we're a trading community. So we're not a signal provider by any means. This is the community page. On the actual website itself, what we have is we have a curated market information, strictly cryptocurrencies, with some of the traditional markets listed, just to give us an idea of where we sit relative to cryptocurrency.
Any correlations in that you're notice that have any value with crypto and any of the outside markets you pay attention to that you've noticed?
No, if anything, there was a correlation with gold.
Okay.
I think that was, I don't think that there is any reasonable correlation between Bitcoin and anything currently. I'd say that, sometimes it behaves like a risk-on asset. Sometimes it behaves like a risk-off asset.
That's why I was asking. Yeah.
And one of the things that actually, so all things are moving towards being more correlated, period. But one of the things that keeps Bitcoin from being as correlated as it could be to anything is the fact that you don't have the same availability on your own trading platform if you're trading equities to just buy into Bitcoin, right? So to move in and out of an asset the way you can on a traditional brokerage account, or the way that retail has access to do that now with stocks, bonds,
that's a great point too.
So it's distanced in that way, and I think that all things being equal, moving forward, that there will be some type of correlation that as the market grows will begin to develop. But it's such a small market right now. You have to think that the size of the crypto market as a whole right now is basically the size of one of your mid cap to large cap stocks as a singular asset. But this is a bunch of assets. So
that's valid. So you guys teach and mentor people.
So what we do is we provide daily market updates. We provide education. So we're not providing signals. We're not looking to be a follow our trade kind of group.
You don't want lazy people hanging out with you. You want people to want to learn how to be self-directed.
Yeah, and you know what? A lot of people, they don't understand that if you're following someone else's system, that person who trades that system, they have an understanding of the expectancy of that system, the losses they can expect to incur. If you're just following someone else's system, you're not prepared to take maybe, if you're a swing trader and your expectancy is that maybe you win 1 out of 4 trades, and your R multiple, your expectancy would be that maybe you're 4 to 1 for every 1 you risk, you gain 4. You might not, if you're a person following that trader, you might not understand that person's system might warrant that they lose 6 trades in a row. And how effectively are you going to be able to trade when you're following someone else's system, when you're the second or third loss in? How are you going to be able to maintain that discipline and execute moving forward? How are you going to learn?
If you're dependent upon someone else laying out a trading structure for you.
Right. Yeah.
So bottom
So
line, you don't learn the secret to trading is it's hard work and perseverance, and a lot of people don't want to pay that price tag, buddy. But
that's absolutely it.
for people that do, and you have an interest in crypto, I'm saying right now, Ryan, whether you like it or not, you're my new trading warrior brother, and Ryan knows is a talented, insightful technician. I could say that after one interview. So glad our paths crossed, bro.
Thanks a lot, Dale.
And good hunting. I hope that pips rain down on you and your partner, and your business grows like a mushroom. But don't
Thanks
take
a
any
lot, Dale.
mushrooms while you're trading. All right, buddy?
Never that.
We have a
All
deal?
right, man. Excellent.
All right, Ryan. Thank you. Thanks for
Pleasure.
taking time to come and edify our community today, buddy.
Thank you so much, Dale.
All right, guy. All right, so that's a wrap, everyone. See everyone tomorrow. Good hunting. Remember, don't just count your pips, count your blessings. Adios.